Welcome everyone to this week's Dynamic Dialogue. It is Tuesday, April 27th, and today we're going to talk about the future of China and global trade. So there's a lot that you'll see going on about this, a lot of things that are happening, a lot of things that are speculating about. I wish I had a crystal ball, but I don't. So I'm just going to share a few thoughts and ideas and some of the things that I've seen lately. So this is Dynamic Dialogue. We do bi-weekly webinars, second and fourth Tuesday of the month. So our next one will be on May 11th. And the link that you have is good for April through June. I will send it out the day of our events so that you have it handy and ready to go. But today I'm gonna start with some trade statistics. I think it's important to note what's going on with the trade. I have a couple of 2020 slides, and then I have one that has a trend in it from China. But the US imported about $2.4 trillion in the year 2020. That's a gain of 7% since 2016, but it was a reduction of 6.3% from 2019. So I'm sure that was impacted by COVID and a few other things. But that compares to an exported total of about 1.43 trillion and a decline of 13% from 2019, but only a 1.4% decline from 2016. So you can see we're not moving these needles a lot. This chart actually shows the US imports, which again is about $2.4 trillion for 2020. And you can see that 435 billion came from China. That was about 18% of the total. 325 billion from Mexico, 270 billion from Canada, that's 14% and about 12% respectively. And then it drops down considerably to Japan, which was 119 billion, but only about 5% of the total. If you look at it from a continent perspective, 45% of America's imports by value in 2020 were purchased from providers from Asia. North American trade partners were about 25% of the import sales to the US and about 24% from Europe. So pretty evenly split between the rest of North America, which really includes Canada and Mexico and Europe, with all of Asia being a 45% contributor. If you look at some of the other countries, the Latin America without Mexico, but including all the Caribbean countries, that was another smaller percent. And then several other areas, including Australia, New Zealand, and whatever. So there's a lot of different things going on here. And given the fact that America's population is about 330 million, its total of this $2.4 trillion in imports translates to roughly $7,300 in yearly production demand for each resident. So it's pretty significant given our population and given all the other dynamics. So we talk a lot about the imports, but we don't talk as much about the exports, and the exports are pretty significant. So here's what we exported. By contrast to the imports, which was 2.4, we only exported about $1.4 trillion. We exported most to Canada, about 255 billion, which was about 18%. 212 billion, pretty close to that Canadian number, went to Mexico, that was 15%. And then a significant drop, 125 billion to China, which was about 8.6%. And then it really falls off. Japan, 64 billion was 4%, and then it's pretty much downhill from there. About a third of the exports, about roughly 33%, went to North American trading partners for the US, and about another third went to Asian markets. It was slightly higher, our exports to our North American partners, primarily Canada and Mexico, but it's pretty similar number to what we exported to all of Asia. Europe received about 22%, and then the rest went to the other smaller countries. It's interesting to me that a small amount of goods goes to India with such a large population there. So I think that's a pretty ripe market for certain companies, but then India has its own challenges and they have their own economy too. And right now they're having some extra challenges given the COVID things they're dealing with. So you can see that there's a lot of countries involved. We talk a lot about China, and China is a major player. Obviously, that's where we export a significant amount, but we import most things from China. And that's in lots of different shapes and forms. So let's take a look at that. Here's the goods that the US exported. So the thing we exported the most was machinery, which includes computers. That was about 182 billion, 12.8%. Electrical machinery and equipment, 163 billion, 11%. Mineral fuels, including oil. So our exports in that area have grown over the last few years. 155 billion there, about 11%. We export a lot of vehicles from the United States. 7% of our exports were vehicles, about $105 billion. Optical, medical, technical medical apparatus, which we're world famous for, $83 billion, 5%. Aircraft, spacecraft, plastics, gems and precious metals, pharmaceuticals, and organic chemicals kind of make up the rest of that. So we're exporting quite a few things. What we're importing is interesting as well. We're importing machinery, computers, turbojets, refrigerators, freezers. They call all that machinery. 361 billion, about 15% of that. And then electronics is second, which is just because some of these things are less expensive than some of the computers and turbojets and things like that. But electronics consists of phones, integrated circuits, TVs, circuit boards, populated circuit boards, and wire and cable, which comes from a lot of different countries. 343 billion there, 14% of our imports. Vehicles, we export a lot of cars, but we import a lot of cars as well. Vehicles imported were about $254 billion, 10%. That includes cars, trucks, and automobile parts as well. Pharmaceuticals is a big area that we import, almost 140 billion, 5.8, just under 6%. And then things like mineral fuel. So we export oil, but we do import oil as well. Gems, precious metals, a lot of that is not found here in the United States. So that's a big area that we import. Optical, technical, medical apparatus, we both export that and import that. Furniture, bedding, lighting, this is an area where we do a lot of importing in this area. $65 billion, which is a lot of dollars, but it's only about 3% of what we import totally. Plastics, and then organic chemicals as well. So it makes up a lot. The import of gems and precious metals, interestingly enough, posted the fastest growing increase in value among the top 10 product categories. This was up almost 84% from 2019 to 2020. So I guess maybe people were stuck home and they just decided to go buy trinkets for their loved ones to let them know they were thinking about them. I don't know, but that's an interesting statistic. The other three top gaining categories in 2020 were pharmaceuticals, which pretty much makes sense with the COVID pandemic. Plastic materials and items made from plastic, that was up 3%. And then organic chemicals was up a little over 2%. Pharmaceuticals themselves were up almost 9% between 2019 and 2020. So this is data from 2020, and it's interesting because it paints the pandemic year. So as we know, most of 2020 was under the umbrella of the pandemic starting in the March timeframe. So a good 9 months of that had pretty significant influence from COVID, and how that changes everything and how that's going to go through time, only time will tell. But I like this chart too, because this is now the previous charts I showed you were all global information. related to the US. This is just between the US and China. And again, we hear about this balance quite a bit. So you can see over time, this goes from 2010 to 2020. The blue, the tallest bar is the blue bar, that shows the total. And then the exports is the shorter bar, that's the numbers. And that's actually fairly flat. You can see 2010 was about 92. The highest it got was 130 in 2017, down in 2018, down a little bit in 2019, and then back up in 2020, probably because of the pharmaceuticals and some of those things that were imported during that time, and the chemicals and lots of other pandemic related things. So it'll be interesting to see once we get through 21, 22, what this time frame is really going to reflect. And then the imports is the middle bar, it's the gray bar, and you can see that peaked in 2018. So that number was $540 billion there. So it's down significantly from that last year at 435 billion, but it's still hard to tell what happens. You can see from 2010 to about 2016, there was a pretty good incline, a pretty good trend of increasing every year. And that was mostly due to the imports. The exports, again, were fairly flat in that time period. But the 2015, 16, 17, we've got a little bit up, a little bit down. 2019 was down in some respects, but then 2018 or 2020 kind of came back up. So the pandemic, again, it's going to be hard to kind of normalize that, and it'll take a couple more years of data to do that. But this is the trade response. And these tariffs have been around for a while. And actually, the first couple of years of the tariffs in the 2017, 2018 timeframe, you can see those numbers were still significantly up in a lot of the imports to the US from China. And so it's kind of remains to be seen what happens with that. So why these statistics matter is that global trade is really more than China. When we talk about trade, there's so much of the conversation that centers on China. And China is a major player, but there's a lot more variables in the whole trade scenarios than just China and the US. And we focus a lot on the imports from China, but again, exports matter significantly too. So it's important to look at this in a little more detail. We want to look at the dollars, those are important, but we also want to say what types of goods are important. What we found out during the pandemic is that things came from China that people were not really aware of. And we found out that we did not have the manufacturing capability in other parts of the world that we might have liked. Things for like pharmaceuticals, things like PPE. We found out that most of the PPE came from Asia, and a predominant player there was China. So there was not a lot of PPE produced here in the United States. We found out things like ventilators, which General Motors stepped up and started producing so that we could get more ventilators for patients across the country. The vaccines and the manufacture of those, it's not just the manufacture, it's the distribution, and it's the storage, and it's all of the logistics that go with that. So what we're finding is there's a lot of components, there's a lot of variables. The imports, the total imports have shown some slight increases from year to year. The total exports, as I looked at from China, are relatively flat. So we're seeing that balance kind of change and do some different things. It's important to notice that the mix and the volume can and do change over time. So what we're importing and what we're exporting can change quite a bit. And the really key matter here, I think, is these trends and tracking are really invaluable. We need to keep an eye on that. We need to not look just at what happened last year or 2 years ago, but look at this over time. And we don't want to go back too far, but the last 10, 15 years can tell us a lot. And as we move forward, we still want to look at what was happening in these times and what we were trying to do, did we get the results that we were trying to get? So these statistics can really become more important. And when you dig down into this, it's really enough to make your head hurt with all of the information that's available, that it seems like a lot of people are glossing over a lot of the detail around this. So there's things in balance and things that we learned are not in balance. We learned some lessons recently and from the pandemic that we're still dealing with worldwide. We found out, as I said before, that a lot of the PPE manufacturers are concentrated in China, and there's limited capability in the US. So as a result of the pandemic, there is now more manufacturing capability, but whether it stays here and how it's going to stay here and what that's going to look like is a matter of time will tell. The pharmaceutical manufacturing and the distribution of that is highly skewed. There's a lot of different areas of the world where that is concentrated, including in Europe. And we know that Pfizer in Germany helped create one of the first vaccines. AstraZeneca is doing a lot for different things, and the different kinds of pharmaceuticals and pharmaceutical chemicals and compounds that are used in all the medicines and whatever. So that distribution is not spread evenly across the globe. And there were some shortages and some impacts to that. We found out, especially in the last few months, about microchips. Microchip manufacturing is tied heavily to Taiwan and Taiwanese companies. Those companies may be in different parts of Asia, but Taiwan has a huge hold on that. The largest company in the world making microchips is a Taiwanese company. It's also important to note that China's global manufacturing has actually been waning since about 2015. So we talk about China growing, and even some of the trade deficit has grown since 2015. But China really peaked in 2015, and they've been doing outsourcing. And they're outsourcing to other Asian countries like Vietnam, Bangladesh, some into Indonesia, some in other countries. And we're finding too that Chinese firms are actually locating in Mexico. There's one particular company where they have doubled their presence in Mexico. So there's a lot of different things going on. Foxconn, who is a Taiwanese company, has a heavy presence in China, and they purchased some land in Wisconsin and had plans to build a huge factory there that recently they've announced is just not going to happen. They've scaled that significantly back. So what are we going to expect in terms of trade globally toward China and whatever? I think, again, China is kind of the linchpin in there because they are the biggest importer for the United States. But what we're seeing is there's a lot of attitudes changing toward China. We've seen that over the last few years. Prior to that, the US and China, the US viewed China really with an attitude of, let's get them engaged, let's do some cooperation, we're going to be compromising here, working with them, and to implement a certain sense of interdependence so that we work together, but each country does what they do, and we kind of let that alone. But what we've seen recently, there's a lot more skepticism, cynicism with China. There's a huge erosion of trust in many of the US factions toward China, and we're seeing a big blame game. We're seeing a lot of companies blame China for things that probably don't have origins in China and are not really a result of China without all of the other factors, or many of the other factors that have shaped where we are. We didn't get to this point overnight very quickly. So we have made deliberate decisions across the globe. Companies have made decisions, governments have made decisions, trade agreements were set and established, and so here we are. But at the same time, we have more skepticism and cynicism toward China, many here in the US. We're also seeing China's attitude toward the US change. There's a significant amount of anger and suspicion toward the US. And China used to almost revere the United States, looking at the United States as the world superpower. And now they start to see the US as more of a declining power, with their own country growing more powerful. So these attitudes can be changed. They may not be based in complete fact, but that's what we're seeing. We're also seeing China's government, their party, exercise their control. We're seeing this in a lot of areas, and we're seeing them pursue more competitive global policies. We're seeing China say we are on par with the United States or superior, and we are going to compete on the same terms and with the same metrics that the US has been competing and measuring itself for years. But again, this world is not made up of just China and the US. And so we're seeing other perspectives. We're seeing other countries in the Asia Pacific region indicate a lot more skepticism toward the US, but also suspicion toward China. We're seeing that they have negative attitudes toward China, which they had before in some areas, but those are intensifying in many instances. And yet at the same time, we're seeing those same Asia Pacific countries lose confidence regarding the leadership here in the United States. So there's a lot of people in those areas. There's a lot of purchasing power. There's a lot of manufacturing power in those Asia Pacific countries outside of China. And so that's something that we want to keep an eye on and see how that continues to transition, or maybe reverts to some of the other, some previously held perceptions. The latest evidence, though, is getting more clear in a couple areas. Tariffs did not really significantly change the trade balance. So there were significant tariffs implemented in about the 2017 timeframe, especially on metals, but there's a lot of goods now that are covered. And since initiating this first round of tariffs in about 2018, they cover now more than about 70% of the goods imported from China. China actually put some retaliatory tariffs in place as well. And these really have increased the number of goods that are imported to China subject to tariffs. And that's been an increase of more than 50%. So that's been a huge thing too. And during this time, the US has implemented 11 rounds of sanctions against various Chinese companies. And there are now 350 Chinese companies on the US Department of Commerce's list of export controlled entities, the most for any country. So 350 Chinese companies that are on the watch list, or we are not allowed to do business with. So that's changing significantly. There was a China-US trade agreement. So phase one pretty much went into, was established last year, and where China subscribed to a set of purchase commitments to increase the imports from the United States over about 2 years. This agreement had China scheduled to purchase about $164 billion worth of US goods in 2020, and almost $200 billion worth of goods in 2021. But as of November in 2020, China had only fulfilled 57% of that commitment to purchase $164 billion worth of goods. So they were almost 50%, over 40% short in November. So that's not a good indicator. And then that's against the $164 billion to purchase almost $200 billion this year is going to be interesting to see if that really does happen. I have a feeling that that's going to fall short as well. What we've also seen is that the White House issued an executive order in late February to examine 4 industries that were significantly impacted by COVID and to look at their supply chain. So this is an interesting event for supply chain professionals. There is now a task force that's working. They have a two-part, well, they have two major milestones. The first milestone is the 100 days. This started in February. I think it was 24th is the date. So if you go March, April, May, that's going to be the end of May is going to be that 100 days. And so that's going to be their initial report from these task forces. And they were chartered to take cabinet level positions and to invite people from across the globe and definitely across the country to participate. Not only government officials, but practitioners, companies and private companies, publicly held companies, academics, and any number of subject matter experts to really look at this. They're looking at 4 major industries, and those industries include batteries, significant batteries that are used in vehicles, that kind of thing. So they're not looking at your AA and AAA batteries that you have in your pantry at home, but they're looking at the batteries that are being used in vehicles and some major types of machinery. Pharmaceuticals, again, from COVID, we found out that the pharmaceuticals are challenged, and what we have for capability and capacity here in the United States is maybe not where we would like it to be, given that we've had a pandemic and we don't know what else is coming. So that's an area. Computer chips, obviously that's an important one, especially when it relates to automotive. But as I've said before in this forum, as we look at what's happening with the automobile industry, it's also happening with other types of electronics. And if you look around at your office or your workspace, you probably do what I do and see tons and tons of pieces of equipment that use computer chips, whether it's monitors and computers, microphones, cameras, keyboards, all kinds of things that use these computer chips, printers and scanners and fax machines and all of that. So computer chips is another of the 4 industries. And then the final one is critical minerals that are used in electronics, and particularly those that are used in electronics used in the space program, in the defense programs, because this is a very important safeguard for the United States. So that's the 4th area that they're concentrating on, is really looking at that from a defense, and not as a video game kind of mineral, but really looking at what's used in space, what's used in defense, what's used in aeronautics and airplanes and all of those kinds of things. And then, like I said before, Foxconn spent a significant amount of money and projected 13,000 jobs, and I think it was a $5 billion investment, and they were going to have revenues of huge amounts for this factory in Wisconsin. And in the last week or so, they've formally announced that that's greatly descoped. Their 13,000 jobs is now, I think it's less than 2,000. I think it's around 1,300. The products that they were going to make TVs, are not going to be made there. They're making some other things. And so that's been a significant change from what was expected to be a big boon to the area and a big rejuvenation of manufacturing here in the United States. So we're seeing manufacturing come back to the United States in some ways, but we're also seeing that just look at what are my options, not just in the United States, but in Mexico, maybe. Eastern Europe is another one. Latin America is even becoming more attractive for different companies. So the evidence is out there that says we still have a ways to go on some of these. There's a few topics that are still very important and are going to stay at the top. One of those, of course, is intellectual property. We have patents, we have trademarks, we have copyrights, all of those, but all of those are only good within the boundaries of the United States. If you have a patent in the United States, it does not carry worldwide recognition. And if you want to manufacture, do business in another country, you need to get a patent, a trademark, or a copyright for that country as well. So there is a lot of concern about that. There has been with a lot of the counterfeiting, a lot of the theft, the copying in particular in Asia, across Asia with manufacturers who take their intellectual property there, but it's other countries as well. And that's going to continue to be a very important component of what to look at, what to safeguard, how that's going to be managed. Technology transfers the same way. There's a lot of concern about how to transfer the technology. Still, there's a lot of technology that's developed here in the United States that's transferred other places. And now we're looking at transferring technology from other countries into this country. In particular, one is the chips. So if you've been following the news, Intel has announced that they're going to invest significant money to try to take some of that chip manufacturer that's now outside the US and bring it into their factories and their areas, in particular in the Arizona campus areas. So there's a lot of technology transfer going on. And as we know, the rate that technology changes is faster than ever. So to keep up with that and make sure that we're transferring it carefully, purposefully, and doing what needs to be done to safeguard everything around it takes a lot more time, a lot more thought, and it needs to be considered carefully before we just react. We're looking at expanding trade purchases. So there's a lot of different things going on where companies are buying things from different places and expanding markets, expanding supply bases, expanding their supply chain. So there's a lot of things going on there. The relationships with China, as I talked about, these have been strained lately, both politically and in the eyes of many citizens in both countries. So it's not just a political governmental thing, it is broader than that. But there have been some meetings begun with China. We've had the change of the White House resident. So that change in administrations means a little bit of change there. But so far, Biden has focused mostly on domestic issues and focused on getting strong relationships patched up with any allies who may have been, who felt snubbed maybe. So that's been the focus, but that China, again, is a big player. And so that relationship, we're starting to see that on both sides, that both countries are reaching out to the other to restart some meetings and bring that in. China is involved in the Hong Kong protests because Hong Kong is no longer an independent state. It is part of China. Myanmar, there are some implications that China is playing a role there, but there's other factions going on there, and there's other places that China may be playing a role that still need to be addressed. India is the other very large country in Asia, and yet India is kind of an enigma and remains so. Right now, COVID is raging there. It's ravaging the country. There are reports that even with the horrific numbers in cases, positive cases and deaths that we're seeing, that they are missing many, many counts because they don't have the wherewithal to do that. I've read heartbreaking stories of people who could not get the care, they could not get into a facility to even be tested for COVID to know that they had it, but their symptoms indicated they did. And it's very, it's heartbreaking. It's a horrid disease, and anybody suffering from it is not in good shape, but India is really having some trouble there. In February of 2020, so just a little over a year ago, India was actually removed from the generalized system of preferences That's a United States designation that allowed zero tariffs on exported goods. And so they no longer have that status. They could have that status reinstated, and that would help them, but they would like to trade more with the US. The US sees possibilities of trading with India as well as other countries in the Asia Pac area, and how that plays out, I don't know. There's a trade agreement, there's talks of trade agreements with India, but right now that's probably not going to happen in the short run. That's going to take a longer term. They have more pressing needs with their COVID issues to focus on. And the US is still dealing with COVID, but we're also dealing with other trade agreements and other country relationships. So that's not going to be high on our priority list in the short run anyway, but that's a big potential there. So these are some predictions that I have that I think this is what's going to happen. I think the U.S. is going to work to repair some trade agreements. We're going to focus on our allies, which we have been doing, but we are also going to look at some of the trade agreements that have been either changed, like the NAFTA that was altered. I still don't know if that's in full effect, although the two agreements are fairly similar. They're significantly similar, actually. So there's trade there. The World Trade Organization is an organization that exists to help foster trade around the globe. So the US had a frosty relationship with the WTO for a while. I think that's going to unthaw, and there's going to be a little bit of warming there, and hopefully that will help some of the relationships and some of the trade that is happening now and will continue to happen. The Regional Comprehensive Economic Partnership is it's a very large trade agreement, and it involves 15 Asian countries. That actually creates the world's largest regional free trade zone. But the US is not a part of that, and it was done, as an Asian country trade agreement. But working into that and working with that organization now is going to be, I think, an important part of what the United States will need to do to keep moving forward in the next few years. What we're seeing is that countries other than China have benefited and will continue to benefit from these US tariffs, because the tariffs are not, at this point in time, it doesn't look like they're going to be lifted or removed anytime soon. So we're seeing countries like Vietnam, Taiwan, Mexico, they are benefiting from the US tariffs on China because they can produce things just as well. And when we import from those countries, we aren't subject to those tariffs. So what happens usually is countries figure out how to get around these, and they will build things in China and then send them to Vietnam, Taiwan, Mexico, or they will work to outsource to those countries, and then the US can import from there if that's the product that we need. And the US will work with their suppliers who have multiple locations in order to get some of these benefits. So we're seeing that already, and I think that that's going to continue for a while. And that's going to be a big boon to some other countries, and it will hurt China, but probably not as much as the tariffs were intended to penalize China. And again, the tariffs are paid for by the importer of record. So those tariffs, I hear people say that, oh, China's paying those tariffs, but only if they are importing those goods, because those tariffs are paid upon import by the importer of record. And that's generally the US company that's buying them, because a lot of the goods produced in China, the actual transfer of ownership happens at the dock, whether it's at the airport or at the dock, the shipping dock, whether it's at the port or at the dock that allows for air transfer. So when that is transferred, then it becomes the ownership of the country that's the importer, and then the importer of record pays the tariffs. And when they pay the tariffs, they pass them along to their customers. So there's a lot of challenge still there. Defense technologies, I think, are going to play an even bigger role than they play today. We looked at the chips, we looked at the minerals, we looked at the intellectual property. I think all of that is still a big play, and that's going to continue to be that. Whether that is considered part of the space program, whether it's the FAA and the the airlines and things they're doing, which is not typically considered defense, but those technologies play a big role in how all those things work and work together. The White House, as I said, initialized a task force in the end of February. This 100-day report due in June, I think, is going to give us a good foundation for what's coming next. The 100-day report will be out probably, I'm guessing, in the mid kind of June timeframe. And I think it's going to be full of findings and suggestions for more actions, and strategies will develop from there. So what I know for sure is there's always a better way. And yet we are in the midst of continuing change. And I think we all just need to be very cognizant of the fact that we can't really get very comfortable, because things are going to keep changing for a while. I think it's pretty obvious that the US-China relationships need some work. These relationships have significant impact to both countries, and there's more potential impact if they're not repaired and not worked on by that. From what I can see, neither side is winning. So I think there's more opportunity for both countries to review their relationship and to see what they can do to broker a path forward. Many supply chains today are involved across Asia. I think the pandemic highlighted, if nothing else, the fact that a lot of companies really did not know the source of many of their key components or many of their subcomponents and manufacturers. I talked to many people in March and April of last year, and they said, we don't really buy that much from China, so we don't expect this to hurt us very badly. And when I talked to them in the summer, they said, wow, we found out that we weren't buying from China, but boy, the people we were buying from are buying a lot of things in China. So these supply chains are very nebulous, very well connected around the globe and across Asia now. Again, with China starting to resource and outsource things since 2015, there's a lot of things that they moved from China to other Asian countries. So now they're linked even more, and these supply chains are even deeper and have a lot more links in them than we thought. So these supply chains can be really difficult to change, and it's to relocate. So if we need to change them, to do that quickly is very difficult and can be really, really expensive. And it takes time to do that. So if you're going to relocate from one area to another, from one company to another, from one location to another, these projects, I've done many of them throughout my career, and they take 4, 6 months, a year or more to actually move from one site to the other, to shut one down and get the other one up and running, because you have to make sure you've got enough inventory to manage the transition. You're training people, you're cross-training people, you're moving equipment. In some cases, you're moving people, you're moving materials, you're moving inventory. So it takes a while, and it takes heads to manage that. And it takes, so that makes it expensive. It very nebulous. The markets, again, the market in Asia is too big to ignore. Between the two countries of Asia, China and India, having about 2.8 million people between them, it's 2.8 billion people. It's too big to ignore that potential for capacity, for capability, and for marketplace. So markets are going to drive a lot of the business, because companies need to have access to those markets. The market size and potential is huge all across Asia. Again, with just two countries having 2.8 billion, of the world's population, it's too much to ignore. And technology really is changing. We see things like blockchain. We see a lot of the different aspects of technology. ERP systems are becoming a lot more common. The connectivity that we have via all of the means that we have, the idea now that people are much more comfortable working remotely, the trust can be built that way. The need for travel is still there, but it's diminished from what it was pre-COVID. So the technology is going to remain a key component of what we do with supply chains in the future. So as I said initially, I wish I had a crystal ball. I do not. But it's a very interesting time to live in. It's a very challenging time. And I think that we as supply chain professionals have a lot to learn, but we also have a lot to offer to help navigate through these choppy waters. So that's our dynamic dialogue. So this obviously was China and global trade. Next time on May 11th, we're going to talk about soft skills for supply chain professionals. I'm going to talk about supply chain resilience at the end of May, inventory management in June, and then the last week or the last session in June, which is June 22nd, I'm going to talk about blockchain technologies. So that's what we have for you. And then as always, if you're interested in further discussion, you can do a 30-minute free callwithjane.com. If you just put that in your browser, that will take you to my calendar. You can schedule some time, and I'm happy to set up and talk about how Purple Link can help your business, because we know that there's a better way to reduce the cost and the risk and to improve the results you get from your supply chain. We do have one ongoing workshop that started the end of March, but it's not too late because everything is recorded, and you can catch up with us if you want to become certified, earn your CPSM, which is to become a certified professional in supply management. You can do that. 3 tests required. This is through ISM. And there are plenty of other certifications you can get if you're interested. APICS, and I've got contacts for those if you'd like some of that. So that's what I have today, and I'd be happy to take questions, comments, or whatever.